Very good morning, friends. So I hope you're all doing good, and I hope you've started your cumulative revision on consolidation standard as well. Well, last class we had a little introduction to the concept of 110, Ind AS 110, wherein we saw the concept of scope of the standard, that in which cases the standard gives you an option not to consolidate, and in which cases it gives you a mandate that you cannot consolidate. Mind the words carefully. The para number 4 is a situation where the 4 conditions are met, and the standard gives you an option that if you want to consolidate, you can. If you don't want to consolidate, it's your choice. Then we also saw the concept of para number 4b read with para number 32 typically, which gave us a concept that it is mandated for investment entities, where I gave you a 3-step model where the entities are mandated that you cannot consolidate. So typically these were the 2 cases as far as the scope is concerned. Then I came to the concept of giving you a framework in terms of how the control assessment is done. Today my main focus is in terms of explaining you that how the control assessment is done under this Ind AS. As I've already made a mention that it is not a rule-based assessment, but it is supposed to be a principle-based assessment. Because nowhere in the standard we are given that there is any percentage criteria which would decide whether you control a company or not. So I'm just going to quickly take a recap in terms of the framework which I gave you, and then we're going to work upon it. So you're going to get a complete idea, after we have done the entire inputs with you. So probably around 1.5 hours or so, sir, you are going to take us 1.5 hours on the concept of a control assessment. In today's was so good, we used to decide control just on the basis of a percentage. That is correct. So now we're going to spend a good time in terms of understanding things. So you'll get a complete framework of thoughts as well, wherein I'll consolidate things towards the end as well. So let's, I think, start with the framework for control assessment. So I'm just going to remind you the control assessment part. So I'm going to convert this into a 3-step model, which I outlined in the previous class as well. So the control assessment, what we are looking at is the framework. How the control assessment will take place under Ind AS, which is a principle-based assessment. So as I said in the previous class as well, I'm just giving you the same inputs. You need to consider a 3-step model. Don't get into at this stage what is power and all those things. We'll just get a basic framework. You need to be clear what questions you need to put across. Now, what is to be seen in the evaluation of those questions, that we'll understand as we progress further with you. So we're going to create a simple 3-step model in terms of making a control assessment. Now, at the first step, you are going to consider 3 sub-steps. So when I'm going to consider a step number A, we're going to consider a total of 3 sub-steps in terms of step number 1. The first thing what you need to do, that there is an investor and there is an investee. So irrespective of the involvement with the investee, mind the words, irrespective of the nature of involvement with the investee, you need to first of all evaluate, does the investor have a power over the investee? So you need to understand the question to be put across. Don't get worried in terms of how do you assess the power, that we are going to learn. But you need to put across the very first question, does the investor have a power over the investee? Now, in terms of deciding that whether he's got a power over the investee or not, so I would put this as a major step. The step number 1 is assessment of a power. In order to make the assessment of the power, there are going to be 3 elements. So when I make an assessment, does the investor have a power over the investee? There are 3 elements to be seen. And the three elements is what I call voting rights, VR, and rather let's call this as ER at the moment, existing rights, because it can be inclusive of the voting rights. So we've got ER that is called existing rights, which gives you a CA, not a chartered accountant, but a current ability, and to make decisions on RA, that is relevant activities. So get the point clear. Power is an element of three inputs: existing rights ER, current ability, and relevant activities. So we need to see that the investor has got some kind of existing rights. So you need to evaluate that the investor has got some kind of existing rights. The rights are already present with the investor. He's already got certain rights when you are making a control assessment. And that gives him a CA that is called a current ability. So when we look at the word current ability, what comes to the mind is as of now, but no. Current ability would not mean as of now. Current ability means when the need arises. So I think let me put across one thing very clear, that when I say current, that is means when the need arises. So when you're looking at the current ability, when we're looking at when the need arises. So we're looking at, do you got some existing rights today? That's going to give you the ability when the need arises to do what? To exercise decisions on relevant activities. So RA means to take decisions on relevant activities. Now, what is relevant activities? Which means something which could influence the profitability of the entity. So this is what you need to see in terms of power. Don't get worried in terms of, sir, what are existing rights? What is a current ability? What do you mean by relevant activities? Can you give me examples of relevant activities? No worry. We're just understanding the framework. We'll work on each of these inputs one by one. But your mind should be clear in terms of how do I proceed with the assessment. In order to make an assessment, investor has got a power over the investee. You need to see, is he got some existing rights, which gives him the current ability, that is when the need arises, to take decisions on relevant activities. And then you go on to the step number 2. In terms of step number 2, we need to see the involvement of the investor with the investee. The involvement of the investor with the investee exposes him, exposes the investor. It exposes the investor to variable returns. So his involvement with the investee exposes him to variable returns. So the question rises, what is a variable return? As of now, you can consider that if as an investor, I am invested in ordinary equity shares of the investee, I get a dividends, and those dividends are not fixed returns in nature, but they are considered to be variable in nature. So my involvement as an investor with the investee exposes me to variable returns, not fixed returns. And then we go on to the step number 3. And the step number 3 is nothing but it is a linkage in step 1 and 2. So we need to see that there is a linkage. We need to see that there is a linkage between, you can say, step 1, that is power, and the step 2, that is return. You need to develop a linkage between a power and return. And developing a linkage in terms of power and return is not a big deal. If you say in terms of step 1, the power is present, and in terms of step 2, you say, yes, the investor exposed to variable returns, my step number 3 says a yes. A yes plus a yes is going to be a yes. any of the inputs becomes a no, the linkage is not there. So when you say step 1 is a yes, step 2 is a yes, the linkage is developed. So in a situation where you say, yes, there is a power, but you say no, there is no exposure to variable returns, there is no linkage, and that would mean that there is no control. I hope, friends, you got the basic framework clear. Your mind should now be tuned in terms of how I'm going to proceed in the control assessment. Power with the three elements, that is, first of all, the existing rights, the current ability, and the case of, we said, relevant activities, then exposure to variable returns, and the linkage. This is the sequence in which you will put questions to yourself. I hope the basic framework is clear. Correct? Wonderful indeed. Now I'm going to work upon the step number 1. But I think in step number 1, I am not going with the same sequence of ABC. I'll first give you inputs about relevant activities. Then I'll give you inputs about current ability. I'm going a little reverse back. So I'll first tell you what are relevant activities, then I will tell you that what is the current ability, and then I'll explain the concept of existing right. So my focus now is only step 1. We'll look at step 2 and 3 later. The focus is purely on step number 1. So let's now focus in terms of the step number 1, which the larger picture is power. The larger picture is power. So as we've already seen, that power has got a total of 3 elements. So power has got a total of 3 elements. I'm focusing on the third element, that is relevant activities. That is relevant activities. Now, if you look at the standard in terms of Appendix B, I don't remember the exact para number. It's difficult to remember the para number, but there is Appendix B to Index 110, which is giving you some broader examples of relevant activities as well. I guess, one of the 2 important examples which I like to give you at this stage is managing financial assets. Now, you would remember when you did the concept of financial instruments, in those particular cases, we said that the financial assets has got a business model of the company. Whether the investments, the financial assets is going to be kept till maturity, or is it going to be held for trading, or there is a dual objective. So all this is a management thought. All this is supposed to be a very crucial kind of a decision. So the standard has given us some examples where it says managing the trade receiver, managing the financial assets is one. Purchase of, let's say, investments, the sale of investment, disposing of the assets in general, purchase of the assets. Which assets are you going to purchase? And what is, which assets are you planning to dispose? So the list of examples given in the standard is illustrative in nature. They're not exhaustive in nature. But at the same time, what we need to understand in the example list is the stress in the standard is that all those activities are very relevant in nature. The decisions on those items, you can say those transactions, is going to influence the profits of the investee. As an investor, if I am in a position to take decisions on those kind of activities, it could influence the profitability of the entity. So if I'm looking at relevant activities, they are those activities which could change the profitability of the investee company. So we're going to put it like this. Let's pen down some notes out here on the relevant activities. So we can say relevant activities are those activities. Relevant activities are those activities which will impact, let's underline impact, profitability. So which will impact the profitability of the investee company. So which will impact the profitability of the investee company. So any such activities which could impact the profitability of the investee company is relevant in nature. And to add on out here, we can just add out here that Appendix B. So Appendix B, you don't need to remember that there is an Appendix B, but this is just for reference. Appendix B of Index 110. It has given us an illustrative list. It has given us an illustrative list. It is not exhaustive. It has given us an illustrative list of relevant activities. So it has given us the illustrative list of all the relevant activities. So the list is not exhaustive in nature. The list is completely illustrative in nature. It is not exhaustive in nature. But we get a basic idea that yes, these activities are relevant in nature. So I think let me pen down the few examples of the relevant activities which are given. So the examples which are given in the appendix are: number one, managing financial assets. So the example is managing FA, that is financial assets. Purchase of assets. Purchase of assets. Next, disposal of assets. Disposal of assets. And they've also made a very interesting input in this particular case: fixation of selling price. When you are in a position to fix the selling price of the products, of course, you're deciding the profitability of the entity. So as an investor, I should be in a position to take decisions on these kind of activities. Right, I guess this is one input that is called relevant activities. We're done with step number 1C. That my rights should be giving me an ability to take decisions on important activities, in simple words. I should be in a position to take decisions on these kind of activities which could have a direct impact on the profitability of the company. Great. This was step number 1C. This was the focus in terms of 1C. Now let's go on to the step number 1B. Now I am going to the step number 1B. We'll come to A after that. So my focus now is in terms of the step number 1B. We're going zigzag. So the focus now is on step 1B, which is called current ability. Which is called current ability. Don't worry, we'll do some case studies also with you, where we're going to see the application of these steps one by one. Now, as I've already made a mention that when you're looking at the word current ability, the basic meaning what comes at the immediate is something which is as of now. No. The word current ability does not mean that when you are making an assessment of control, I'm looking at the ability as on that date. No, it is futuristic in nature. It is futuristic in nature in the sense I'm looking at that when the need arises, will I be in a position to influence, to take decisions on relevant activity? So as I said earlier, the word current means that this is when need arises. So can you explain what do you mean by when the need arises? I think now let's give you a simple example. Hear this carefully. There are some wonderful examples given in the appendix B to the standard, also contained in the study material as well. Let's begin with a very basic example, then we'll do some more complicated examples with you. Let's say, for example, there is a company A Limited and it is already got in terms of B Limited, let's say it's got majority shares in this particular company. Well, I would say unless mentioned otherwise, I have all the logics to presume that if A got a majority rights in B, I think he's got a control. Unless there is anything to the contrary, the presence of the majority shares definitely indicates, that in this particular case, the current ability is present. Whenever the meeting will take place, let me put it now further. Let's say there is going to be a journal meeting. There is going to be an annual journal meeting in which decisions on relevant activities are to be taken. So I am making an assessment today and the meeting is scheduled, let's say, another 3 months later. Mind the words. I am doing the assessment today and the meeting is, let's say, scheduled another 3 months later. So I know that if there is nothing to the contrary, if you are a majority stakeholder of this company, then even after 3 months, you should be in a position to take decisions. But of course, within those 3 months, some transactions could occur and that could take away your majority voting rights. So maybe today you've got majority voting rights, but when the meeting is scheduled 3 months later, in between these 3 months, anything can happen. So basically, when we're looking at the word current ability, I would put it like this on a time scale for a better understanding. I would say you are doing the assessment here. You're doing the assessment here, and let's say the AGM, the meeting in which decisions are to be taken, there is a gap of, let's say, to the extent of 3 months out here. So there is a gap of 3 months out here. If there is a gap of 3 months out here, anything can happen in these 3 months. So what I'm looking at a current ability is that when the need arises, when the meeting will take place, with my existing rights, will I be in a position to take decisions at that time? Get this very clear. So what I'm saying, I am doing my assessment sitting as of today here, and I am making an assessment. I'm making an assessment that once the meeting is scheduled 3 months later, will I be in a position to take decisions at that time? Because if anything is going to happen within this 3 months, it might take away your rights as well, or you may get some more substantive rights in between. So what I am now going to do, I am going to first take you to some examples, because I want to give you some variety of examples to make the decisions on current ability. In the example, the existing rights will be given. And we just need to see whether those existing rights will be able to give you the kind of, you can say, current ability or not. So we'll look at those examples, then I'm going to make some charts after the example. So I am first going to take you to a very interesting example. Let's have a look at the example in the appendix to the standard. And I am looking at example number 3. This I've taken from the appendix to the accounting standard. So let's read this. We'll make some notes later. The investee has annual shareholder meetings at which decisions to direct the relevant activities are made. Mind the words carefully. The decisions to direct the relevant activities are taken in the annual shareholders meeting. So if I am making an assessment today, I am looking at when the meeting will occur. Will I be in a position as an investor to take decisions, to direct decisions at that time or not? It says the next scheduled shareholders meeting is in 8 months. So which means technically, if you ask me, sitting today, I am focusing that once the meeting takes place 8 months later, will I be in a position to take decisions 8 months later? Well, forecast it. So you're sitting today and trying to visualize that later, 8 months later, when the meeting occurs, will I be in a position to direct? However, the shareholders individually or collectively who have got at least 5% voting rights, they can call a special meeting to change the existing policies over relevant activities. But there is a requirement to give a notice to the other shareholders, means that such meeting cannot be held for at least 30 days. Ordinarily, the meeting is scheduled 8 months later, but shareholders with a 5% or more voting rights can call for an early meeting. So in any case, the meeting cannot occur 30 days before. That means I am looking at sitting today whether I will be in a position to direct the relevant activities 30 days later. Is there any kind of rights I have which will give me the right to the current ability, I would say, to direct relevant activities? Let's see further. Policies over relevant activities can change in these special meetings or the scheduled shareholders meeting. This includes approval of material sale of assets, that's relevant activity, as well as making or disposing of significant investments. So all relevant activity decisions are to be taken in the meeting which is scheduled 30 days later. So we know decisions on relevant activities are to be taken 30 days later. I need to now say what kind of rights you've got. Are those rights going to give you the current ability or not? So existing rights I'll give you in the question. We just need to make an assessment of the current ability. Now, the fact pattern applies to all the examples A to D, and each example is to be considered in isolation. So we are given now 4 examples. The fact patterns are similar, but we are given 4 examples, and we will first only look at the existing right. Now watch this carefully. I'll make the notes also later, don't worry. An investor holds a majority of the voting rights of the investee. I'm going to first of all put across a question to myself. What is the existing right? Before I do the current ability testing, I'm going to first of all put across a question. What is the existing right? I would say if you've got majority voting rights of the investee, that's an existing right. Let's go further. We'll do the current ability later. Let's go to example 3B. Investor is a party to a forward contract to acquire majority shares. So the investor is not having shares as of now, but he's entered into a forward contract to acquire the majority shares. Now please understand one thing. The existing right is not necessarily that you already have majority shares. The existing rights could also be that you're party to a forward contract. Now you need to see that if you're party to a forward contract, maybe before the meeting is scheduled 30 days later, the forward contract settlement takes place before that date. And once the settlement of the forward contract takes place before the 30 days time span, can I say you will get majority voting rights? So you cannot say that the existing rights is holding majority shares. Even if you're a party to a forward contract, that is also considered to be, you can say, an existing rights. I hope I'm making sense. So because if you are a party to a forward contract, now meeting is scheduled 30 days later. Today, somebody else may be having majority shares. But since I'm a party to the forward contract, before the meeting takes place, the shareholdings can change. And I would get, the majority shares before the meeting is scheduled. So today, somebody else is a majority holder, but being in a forward contract agreement, tomorrow I will become a majority vote holder, which means I will be taking decisions in that meeting 30 days later. Correct. Let's go further. I'm just looking at the existing rights at the moment. I'll come back to the agenda of the assessment of current ability later. So I'm just first of all looking at the inputs in terms of what kind of existing rights are there. Let's see further in terms of example 3. An investor holds a substantive option to acquire the majority shares. Did you notice something interesting indeed? The first example was you're having majority shares. The second example is you are a party to a forward contract. The third example is that you've entered into an option contract. Wow. Now, I would just like to take you back. Your knowledge on the forward and the options contract, what you've learned in financial instruments, because these existing rights, before we assess the current ability, we need to get the thoughts process clear. So in this example right now, my focus is only looking at what kind of existing rights are there. We'll do an extensive discussion on existing rights later. Then it says in example number 3D, investor is a party to a forward contract to acquire majority shares. Even this example, like 3B, is on a forward contract. So one thing is very, very clear, as I look at the example number 3, A, B, C, D, I can watch out that the example is focusing on three kinds of existing rights. You already have majority voting rights, one. You're a party to a forward contract to acquire majority shares, two. And you're a party to an option contract to acquire majority share. Now, what is the difference between these three contracts? How would it make a difference in terms of making a current ability assessment is what I need to see. Let's have a look. I'm now going to first of all take you further inputs out here. Now watch this further. Watch this very carefully. So I'm just going to give you a thought process now, and then we'll come back to the examples. But first, let's get the thought process very clear, then we'll come back. We are working on the step number 1B, which is current ability. We are working on the step number 1B, which is supposed to be a current ability. And for the purpose of current ability, I am looking at different kind of existing rights. For the purpose of the current ability, I am giving you a different kind of existing rights. So there are three kinds of existing rights, as we can see in the example as of now. That the investor is already got majority voting rights. The investor is a party to a forward contract. And the investor is a party to an option contract. And when he is entered into a forward or he is entered into an option contract, this is to acquire majority voting shares. This is to acquire a majority voting rights as well. Now watch this very carefully, friends, as I proceed. So as I said, these are the rights with you as of today. But when I'm looking at a current ability, it's a futuristic assessment. What happens when the meeting takes place? So this existing rights is something which you've got as of today, and the current ability assessment is when need arises. And in the example, when will the need arise? The need would arise 30 days when meeting takes place. 30 days when the meeting takes place. So we need to understand when the meeting takes place, will I be in a position or not? Now please watch this carefully. If you have got majority voting rights, I always tell people a very simple input, jiski lathi uski bhains. That's a Hindi phrase which is called jiski lathi uski bhains. Which means that if you've got majority voting rights, I think unless to the contrary, will there be a current ability? I would say yes. If you ask me, I would say yes. There is nothing to the contrary. If you don't give me any contradictory facts, you've got majority voting rights. That means when the meeting takes place, you are the boss. You will get the current ability to take decisions. Now, when you've entered into a forward contract, what is most important is when will the contract settle? Is it going to settle before the meeting? Or is it going to settle after the meeting? So what is important for me in the current ability is to see when is the settlement of this contract going to take place. So in the given example, if I say the settlement will take place before 30 days time, before 30 days time, that means by the time the meeting occurs, you would have already acquired a majority voting rights. So if the settlement takes place before the meeting, I would say, yes, I get a current ability. Because once the settlement takes place, you will be getting majority voting rights. So I would say yes, the current ability would arise. But if the settlement will take place, let's say after 30 days, then in that particular case, you cannot get a current ability. Because by the time the meeting is scheduled and your forward contract is not even settled, then you don't have majority voting rights by that time. So in that particular case, a current ability cannot arise. And one thing, friends, I like to tell you, when there is a forward contract, I also tell you, I told you earlier as well, that there is no exit. एक बार जो कमिटमेंट कर दी उसके बाद तो मैं अपने आप की नहीं सुन सकता. So when you've entered into a forward contract, in this particular case, when you've entered into a forward contract, which means there is no exit, the contract is bound to be settled as well. So we are only looking at the settlement because it will be settled for sure. There is no escape route which is available. Whether it is going to be a gain or whether it's going to be a loss for the person entering into the contract, you have to honor the contract. There is no exit. So the only parameter to be evaluated is, will this forward contract settle before 30 days or will it settle after 30 days? But now comes the interesting part. When you're looking at an option contract is something where you can exit. You may choose that I will not exercise the contract. You may choose that you will exercise the contract. So forward contract is something which will be honored irrespective. But option contract is something which is a matter of choice for the person entering the contract. He is in a long position and he would be in a position to decide whether I want to honor the contract or not. So the first thing to be seen, if it is an option contract, is that will it be exercised? The first thing to be seen is that will it be exercised? So you need to first of all see that whether it will be exercised or not. The question of settlement will come later. Because if you've entered into an option contract, we need to first make an assessment, will you exercise the contract? And whether you will exercise the contract or not, you already know with the understanding of the options contract that these contracts could be in money, they could be at money, they could be out of money, they could be deeply in money, or they could be deeply out of money. Wow. So you know this very clearly that as far as the option contracts are concerned, they may or may not be exercised. So you need to make an assessment of the options contract, that is it in money, is it out of money, is it at money, is it deeply in or deeply out of money. So there could be, 5 permutations, combinations. But I put it 3. Why? I'll tell you. There are 5 permutations, combinations. So I would say one is that it is deeply in money. And one is, I would say, it is deeply out of money. And the other one, I would say it is at money, or it is in money, or it is out of money. So I would say typically the 5 situations would fall into 3 broad categories. The option is deeply in money, the option is deeply out of money, or the option is in at out money. Now, why did I do that? See, in this particular case, I would say if it is deeply in money, I am saying, yes, I will exercise. Yes, I will exercise, because if it is deeply in money, it is indicative that yes, I will definitely exercise. But if it is deeply out of money, I am categorically saying no, I will not exercise. And if it is in money, or is it out money, or is it supposed to be, in at out, I cannot say with a confirmation that I will exercise. I cannot say with a confirmation that I will not exercise. I would say in this particular case, it is subjective. It is something which depends. You cannot be pretty sure. Because when it is in at out money, you cannot say 100% for sure that I will exercise or I will not exercise. Because if it is in money, you don't know. If it is even out of money, you may have some non-financial considerations which will motivate you to exercise the options. So it is something which is not a confirmed case, but it is something which is subjective in nature. So I would say subjectivity cannot be a part of my exams. Subjectivity cannot be a part of my exams. The examiner cannot, tell me to do some subjective assessment, because different people will reach different conclusions. But if you say it is out of money, then there is no current ability as well. Because if you're saying I will not even exercise, then where will the current ability come? It cannot. But if you say yes, I will exercise, trust me, I'll go back to the question of settlement. Now, was this clear? If it is an option contract, there are two parameters to be evaluated: whether you will exercise or not. When you say yes, you will exercise, then you also need to see what is the time period within which settlement will take place. So when it was a forward contract, there was no assessment whether you will exercise or not. Because when you enter into a forward contract, it will definitely be honored for sure. So the only parameter to be seen is whether a settlement will take place before the meeting or not. But when it came to an option contract, you have got a choice to exercise or not. So if you say you will exercise, then you need to see the settlement period as well. So there are two parameters to be evaluated. Whether you will exercise or not, if you say you will exercise, then it depends. The settlement should take place before 30 days as well. Aha, so the moral of the story at this particular stage. Let's put down the moral of the story at this particular stage. I can see in the example number 3, which we are discussing, that there are basically three kinds of voting rights, three kinds of, you can say, existing rights I'm looking at. If you have got majority voting rights, my obvious answer on current ability is yes. If you're looking at a forward contract, everything depends upon when is the settlement of the contract going to take place. If you're looking at an option contract, then there are two parameters. Will you exercise or not? The only confirmed case when you will exercise is when it is deeply in money. Then you go to the next question, whether the settlement will take place before the meeting or not. If you say, I will not exercise, that is deeply out of money, no current ability. If you say it is in at out money, in those particular cases, we can say it is subjective. I don't know. There could be other factors pushing the management that even if it is out of money or at money, I might exercise. There could be factors, even if it is in money, I may not exercise. Did you get my thought processes clear, friends? Is my thought processes clear at this particular stage? Wonderful. I will now first document the notes, then I'll come back to the example number 3, where we are going to see the current ability based on those thoughts. So this is not the exhaustive list of existing rights. This is only with reference to the example number 3, where the different kind of existing rights are given in terms of majority voting rights, in terms of forward contract, in terms of an option contract. So we'll see what kind of considerations goes in the assessment of the current ability test. So let's make some notes now at this particular stage. So my focus is back on the step number 1B. My focus is now back on the step number 1B. We'll consolidate the inputs also once all the steps are done. So we are focusing now on the current ability. So let's create some permutation combinations. Let's create some wonderful charts to you. And based on that, you can decide. So as I'm going to make a chart, keep thinking on the permutation combinations. This is more or less an exhaustive list of permutation combinations based on the existing rights in example 3. So we'll make a wonderful chart now at this particular stage. So we'll take the existing rights and we'll see the kind of assessments required. So let's put it like this, ER, and let's see the evaluation. Let's see the evaluation of current ability, that is CA. So the focus is on step number 1B, which is supposed to be the existing rights. So as I said, I'm just concentrating on example 3 on the 3 different kinds of rights. What are the other kinds of rights? What assessments are done? That we'll see in 1A. So I'm looking at the first one, that you already have majority voting rights. Number 2, we're looking at that you are a party to a forward contract. You are a party to a forward contract, which is again to acquire majority voting rights. And the third one, we're looking at that you have already entered into an option contract. You've already entered into an option contract to acquire majority voting rights in this case again. I guess, friends, let me put some questions to you and let's see if you can answer them well or not. So let's go with the details with you. Can I say majority voting rights? Can I make a statement unless mentioned otherwise? The answer of current ability is yes. So unless mentioned otherwise, the current ability undoubtedly is a yes. So if you've got majority voting rights, it goes without saying, unless there is anything to the contrary, you've got majority voting rights. If you're a party to the forward contract, there is a question to be put across. What is the settlement period? So when will the settlement of forward contract take place? So we need to basically make an assessment, when will the forward contract settlement take place? So if you say before meeting, if you say it is going to be before meeting, or you're going to say it's going to settle after the meeting. So tell me, friends, if it is before meeting, yes or no? The current ability in that case would be a yes or no. You've got a forward contract which will settle before the date of the meeting. So will you get a current ability? Yes. And if it is later, can I say no? There is no current ability in that particular case. Great. Now, if it is an option contract, question number 1. Here there is only one question. Here there are going to be 2 questions to be evaluated now. So the question number 1 is, will the option be exercised? Will the option be exercised? That is one question to be seen. So when you say will the option be exercised, I would say it depends upon, is it deeply in money? Is it deeply out of money? Is it deeply out of money, or is it in, at, or out of money? So these are the 3 permutations combination. If you say it is deeply in money, I would say yes, I will exercise. If it is out of money, I'll say no, I will not exercise. And if it is in, at, out, it is subjective. We are not discussing the subjectivity. We're not looking at the subjectivity. And if you say yes, I will exercise, then you go to the question number 2. And you again see, when is the option contract going to do a settlement? So your focus needs to be very clear that there is one question for a forward contract settlement period. There are 2 questions to be seen for an option contract, will you exercise or not, and the settlement period. So in this particular case, when you look at the settlement, this again we can say before the meeting. So is it supposed to be before the meeting, or is it after the meeting? So if it is before the meeting, then the current ability is a yes. If it is after the meeting, the current ability is no. I hope, friends, I am 100% clear on the agenda, not even 99. I think the time spent on the current ability should also give you the current ability when the need arises in the exam to make an assessment. Are we 100% clear? Very good. Okay, so I think now with this assessment, I can come back on the concept of the current ability in example 3. Now the examples are going to be simple, work through. You'll see them that they're very, very simple and straightforward indeed. So let's now come back to the example number 3, and now we are going to look at further details in this case. So we've already seen the base example. Now let's go to example number 3, ABC. So we'll concentrate on the current ability. Existing rights we've already seen. Now the focus is only on the current ability. So it says investor got a majority voting rights in the investee. The investor's voting right are substantive major because the investor is able to make decisions about the directions of relevant activities when they need to be made. The fact that it takes 30 days before the investor can exercise its voting right does not stop the investor from having the current ability. Nothing stops him from the current ability to direct the relevant activities from the moment he acquires the shareholding. That's what I said. That if you've got majority voting rights, there is nothing to the contrary. And in this particular case, it is implied that you've got the current ability. Let's go to the next one. Investee is a party to a forward contract to acquire majority shares. The settlement of the forward contract is going to be 25 days. You decide. Is there going to be a current ability? You're a party to a forward contract. Settlement is 25 days. The meeting is in the next 30 days. Do you think I get the current ability or not? That's right. Yes. So I think I'm just going to look at the main answer without reading the details. So we can say in this particular case, if I look at the contract, the investor's forward contract is substantive major, and he will get the current ability before the forward contract is settled. So in this particular case, since the meeting is 30 days later, and I am going to get the settlement in 25 days, I get the current ability. Let's first look at 3D, then we come to 3C. First 3D. Investor is a party to a forward contract to acquire majority shares. The forward contract settlement date is 6 months. Do you think I get in this particular case, a current ability? You are a party to a forward contract, but the settlement is 6 months. The meeting is 30 days later. Do you get any current ability? No. So in this particular case, we can say the existing shareholders will get the current ability to direct the relevant activities. He will not get the current ability. The existing shareholders who are already the majority stakeholders of the company, they get the current ability. He doesn't get a current ability. That's correct. Let's now go further to example 3C. Investor has got an option to acquire majority shares exercisable in 25 days, 1, and is deeply in money, that is 2. I want to make a strong statement now at this stage. In terms of an option contract, I think the only permutation combination when it will lead to a current ability is it is deeply in money and the settlement is before the meeting takes place. Agreed. There are 2 parameters in this particular case. We can say, number 1, it is to be deeply in money, and number 2, in this case, the meeting is going to take place, settlement will take place before the meeting. So since it is exercisable in 25 days and is deeply in money, the same conclusion reached as in example 3B, the current ability is present. Did you notice that in the examples, we are nowhere given the data when it is deeply out of money? We're nowhere given the data when it is in at out money, because in at out money will make it subjective. Deeply out will mean no current ability. So the examples given is also very clearly telling you that if it is majority voting rights, yes. If it is forward contract, settlement date will decide everything. If it is an option contract, whether you will exercise or not, and the settlement date will decide things. That's the moral of the story. That's what we're going to put across when we come to the mind mapping. My step number 1C is done. My step number 1B is done. Now we need to go to the step number 1A. So now I'm going to go to the step number 1A with you. So I guess let's add on the step number 1A. So major work, of course, is to be done in terms of step number 1A. I would say majorly step 1 ABC put together. Step number B is not, step number 2 is not a very big challenge. Where you're looking at exposure to variable return. Third, in any case, would not require any kind of assessments, because third is simply based on the assessment of step 1 and step 2 put together. So let's come back on the step number 1A now. So we're going in the reverse order. C is done, B is done. Now the focus is in terms of A. We are looking at the existing rights, ER. So now the focus is in terms of the existing rights, that is called ER. Let's have a look. Now friends, hear this carefully, because now this will get a little more complicated as well. But let me remind you the chain. We are on the assessment of power, which is a part of the control. My overall assessment is control, but within the control assessment, we are on step 1, which is a power assessment. And within the power assessment, what is important is to see what kind of existing rights you have got. Now, watch this. The standard says that there are two kinds of existing rights. The standard says that there are two kinds of existing rights. One is what we call voting rights. So I'm just going to create a framework with you. Then we'll do a lot of examples on this area as well. So one is called voting rights, and or the other kind of rights is, you can say, the power to appoint or remove. The power to appoint or remove the majority composition of board of directors. The power to appoint or remove the majority composition of BOD, board of directors. Now, one thing which I would like to say, it's a little personal view, so don't take it from the examination point of view. So I am giving a little personal view in terms of things. So disclaimer. When I am looking at the right to appoint or remove the majority composition of board of director, I think it's a difficult assessment. Let's say, for example, investor has got no voting rights, and he's got only the right to appoint or remove the KMP. It's going to be very difficult in a practical life situations, perhaps, to prove that there is a control. The reason is that, even a consolidated balance sheet is going to look very tricky. Let's say, for example, if you establish a control on the basis of this parameter and you've got very less shares in a company. Let's say you've got around a 10% stake in the company. So what do you prove in that case? That you've got a 90% NCI on a mathematical levels, which is going to look very, drastic in terms of consolidation. So practically, it'll be a very difficult exercise for professionals to prove that there is a control only on the basis of this parameter. Theoretically, yes, I would say that if there is a control in terms of majority composition of board of directors, a power can arise. But I would say the main concentration, even from an examination perspective, is going to be more on the voting rights. This is more like supplement. If you tell me that as an investor, you've got voting rights and you've also got, the right to appoint or remove the KMP, makes sense to me. But if you tell me to make an assessment that I've got negligible or no voting rights and you've got only the right to appoint or remove the KMP, I think it's difficult to prove the control, the presence of power in this case. So let's consider this to be, more like a supplement in nature. Okay. Now, when you look at the concept of voting rights, there are basically two situations. When you look at the concept of voting rights, then I would say there are two situations which arise. Number one, we can say that as an investor, you've got already majority voting rights. Or as an investor, you've got less than majority voting rights. So you've got either majority voting rights or you've got less than majority voting rights. Now, there can be certain permutations, combinations. If you've got majority voting rights, there can be two situations. You get power or you do not get power, sir. But you said a little while back that if you've got majority voting rights, that implies jiski lathi uski bhais, then I should get a power. Now you're making a very different statement. You're saying that if you've got majority voting rights, you may or may not get a power. Yes, I'll give you examples, no worry. So when you say that you've got majority voting rights, there can be two situations. And the two situations is that you've got majority voting rights and the power is there. Or you've got majority voting rights, but in spite of majority voting rights, you've got no power. Let's, I think, first concentrate on this area. Now, when you say that you've got majority voting rights, when you say that you've got majority voting rights and you say it is power, this is something which is implied unless mentioned otherwise. But when you say that you've got majority voting rights and still you don't have a power, well, how is that possible? The standard gives us example. Your exercising the power is subject to permissions. Like, for example, I am a majority stakeholder of the company, but every time I need to exercise my rights, I need to take an approval from the court. So I need certain approvals. May I go to drink water? That reminds me in school, we used to say, may I go to drink water? So in this particular case, you may be a majority, you might be a monitor in the class, but what is the rights you've got is nothing. So in this particular case, we can put it like this. That when you say you've got majority voting rights and I say there is no power, this is when it is subject to, you can say, permissions. You need court permissions, you need approvals. In this particular case, you will not have a power. So when the investor has got a majority shares, I'll ask him, do you need any permissions before you exercise them? He says, sir, I need a court approval. I'll say, boss, even if you've got a majority voting rights, if it is all subject to permissions and approval, you don't have a power. And this is something which is implied unless mentioned otherwise. This is implied unless mentioned otherwise in nature. If there is nothing which is given to the contrary, you've got a majority voting rights, power is implied. But if the question clearly tells me that your majority rights are subject to permissions and approval, there is no power. But now comes the interesting part, that you've got less than majority voting rights. In this particular case, can we get a power in this case or not? With less than majority rights, can I get a power? I may. I may get a power in this case. This is the real subjective assessment. So I think this is where we need to work. So we are now looking at three cases in terms of existing rights. I'm looking at three cases in terms of existing rights. I'm looking at, you've got majority voting rights, unless mentioned otherwise, you've got power. One. You've got majority voting rights, but it is subject to approval, so you do not have a power. Third is you've got less than majority voting rights. I need to see how will you get a power. So we're going to now look at this case. Let's make an extension. So we're looking at this particular case where I'm saying that you've got less than majority voting rights. You've got less than majority voting rights, but still we've got power. So there is less than majority voting rights, but still we have got a power in this case. How would you prove? How would you prove that you've got less than majority voting rights and still we've got power in this particular case? I'll tell you. Standard has given us some permutations and combinations. The standard has given us some permutations and combinations, and there are a total of 5 permutation combination. So see, we are going, in between, deep. So what is the thought process? Let's get the step 1A clear now. When you say existing rights, the focus is in terms of what? You've got majority voting rights. Unless mentioned otherwise, you've got power. Done. You've got majority voting rights subject to approval. Sorry, you don't have power. Third, you've got less than majority voting rights. Can I get a power? Yes. Depends upon the 5 combinations I'm giving you. So you've got less than majority voting rights plus, I'm saying you've got less than majority voting rights plus, there is a contractual arrangement. There is a contractual arrangement with other investors. Now, please look at this chain very carefully as I discuss, because this we'll go to support this also with practical examples also to you, which are given in the standard. But first, let's get the chain of thought very clear. So what I'm saying, that as an investor, you've got less than majority shares, but you've entered into a contractual arrangement with other investors. I always tell people on a very lighter side, this is like Gadbandhan Sarkar. I'll call this, is something like a coalition government. Because when you say that you've entered into a contractual arrangement with other investors, it is something like, a coalition kind of a government you see in the country. See, what do you mean by this particular case is, let's say there is an investor A who's got a 40% stake in the company. He enters into a contractual arrangement with another investor B who's got a 20% stake in the company. So he enters into a contractual arrangement to say that we will always act together. So when they will act together, since they are contractually agreed with each other to act together, we can say put together, they get a 60% stake. So they get majority. Now, let me also ask you something at this stage. As an investor, I've got less than majority, and I enter into a contractual arrangement with another investor, and put together, we get a majority. Is it a confirmed case of power? If you've got less than majority and you enter into a contractual arrangement making it more than 50, do you think it is a confirmed case of power, or is there any kind of subjectivities which can arise? I guess if you ask me in this particular case, I would say it is a confirmed case of power. Because in this particular case, when you have entered into a contractual arrangement, I think put together, your percentage is more than 50. It's a confirmed case of power. So I would say in this particular case, it is a confirmed case of power. This will be a confirmed case of power. Because your percentage and the other person's investor's percentage put together definitely gives you a power in this particular case. Let's look at another combination. Let's say you've got less than majority voting rights, and along with this, you also get the right to appoint or remove the key management person. You also get the right to appoint or remove the key management person of the company in this particular case. Are you going to get a confirmed power? Not necessarily so. If you've got less than majority voting rights, but you also have the right to appoint or remove the key management person, you cannot say with 100% surety you get a power. It is subjective. It needs more assessment. You need to look into the facts and circumstances of the case. So I would say it's not a confirmed case, but we can say further evaluation required. I would say a further evaluation required. Now, what kind of evaluation is required that we will see in the practical illustration? Don't get worried on that. So once we say that you've got dual rights, you've got less than majority voting rights as well, you've got the right to appoint, remove KMP as well. Whether both these rights put together is going to give you power or not depends upon the facts of the case. Let's look at more combination. Now, the next interesting combination which is given in this particular case is you have also got potential voting rights. You're already a majority, less than majority shares, but you've also got potential voting rights as well. Now, you would say, what is a potential voting rights? As an investor, you have got convertible debenture. As an investor, you've got convertible preference shares, which is going to be converted to equity shares. But the presence of potential voting rights is not a confirmed case of power again. You cannot say that this is a confirmed case of power, because if you've got less than majority voting rights and potential voting rights, whether you will exercise those potential voting rights or not. Because if they're optionally convertible instruments, whether you will be exercising the option to convert or not is again needs to be seen. So I would say even in this particular case, evaluation is required. How would the evaluations be done? That we'll see in a practical illustrations as well. Next. You've got less than majority voting rights and there is nothing else. There is nothing else with you. You've simply got majority, less than majority voting rights, but you've got nothing else in life. So then how will you get a power? I always tell people, a phrase which comes to my mind, Andho mein kana raja. I always tell people that, if I am the biggest majority stakeholder, even though I have no majority, more than 50, but I am the biggest shareholder of the company. When the meeting takes place, it is me and only me who's present in the meeting. Other shareholders are widely scattered. If other shareholders are widely scattered, there is a possibility that I might get a control. So in this particular situation, I am less than majority, but I am still the biggest shareholder of the company. Even with a less than majority, a 48% stake. So ultimately, I am the person who is actively engaged in the meetings of the company. Other people don't even come to the meetings. It's like, that the number of people present in the meeting, I am the majority present in the meeting. So ultimately my, things gets dictated. So, but I would say this is again not a confirmed case of power. This again needs an evaluation as well. So you will first of all look at the question and see which category the question should fall into. First of all, look at the evaluations and see which category the question falls into. Is it a case of a contractual arrangement? Confirmed power. Appointment or removal? Evaluations. Potential voting rights? Evaluations. Nothing else? Evaluation. And finally, it can be a combination of any one or more. It can be a combination of any one or more. So there can be a combinations of all these clauses as well. And that's how the assessments will take place. Some moral of the story. I think I've given you the conceptual inputs before we take you to the questions. Let's get the mapping clear once again. So I am now on the step number 1A. We covered a long journey. As I started in the morning, I said the control assessment will take place at least 1.5 hours. That was a minimum, I said, at least 1.5 hours. And once we do all the illustrations and all, you'll get a good mapping in terms of mind how the control assessments are done. So I started my inputs on step number 1. We are concentrating only on step number 1 at the moment, where I said power is on my mind. So as an investor, how do you prove a concept of power? I need to see existing rights, I need to see current ability, and I need to see relevant activities. I started my discussions on relevant activity. Any activities which could influence the profitability of the investee, relevant. Current ability means when the need arises. We saw the combinations of majority, forward, and option contract. Now we are focusing in terms of step 1A, where we're looking at that when you say existing rights, it's either majority rights or it is right to appoint or remove the KMP. On a standalone basis, a right to appoint or remove KMP is difficult that it'll give you a power. So we're concentrating on the voting rights. Three combinations comes in. If you're majority voting rights, unless mentioned otherwise, you get power. If you got majority voting rights subject to approval, you don't get a power. If you got less than majority voting rights, it depends upon these combinations. So first look at the question, see the category. If it is less than majority voting rights and you're saying that there could be power, combination 1, coalition. You entered into a contractual arrangement with another investor to act jointly. Confirmed case of power. Second, you've also got the right to appoint or remove KMP, subjective assessment. Third, you've got potential voting rights as well. Depends whether you'll exercise those potential rights or not. Fourth, you've got nothing else, but still you're the single largest shareholder of the company. So you could get a power. And fifth, there could be any other more than one combinations as well. You've got the right to appoint majority board of directors. You've also got potential voting rights, etc. As a combo package, you may get a power. Am I clear, friends, with the thought processes, I guess? Are you pretty clear with the thought processes of my step number 1A? We're now going to do some questions with you, understanding the analysis as well. That's great indeed. Let's now take it further. So I am going to first take you to a small little question. This is example number 4. I'm looking at the example number 4. Now, what I want, friends, to you, when I read the question, try to analyze which category the question will fall into. Is it a case of majority, which is unless mentioned otherwise? I don't see a question coming on that. Is it a majority subject to approval? I don't see a question coming on that. So one thing is pretty sure. All the questions, what we're doing is on the third block. That is less than majority. So you need to see which combination is it. Contractual arrangement, right to appoint, remove KMP, potential voting rights, nothing, combinations, whatever. Let's read the example 4. Investor A, investor acquires a 48% of the voting rights, less than majority. The remaining voting rights are held by thousands of shareholders, none of which individually has got more than 1% of the voting rights. I am the majority voting rights. I'm the majority stakeholder, in the sense, not majority otherwise, but I'm the biggest shareholder of the company. 48% is with me. Rest everybody is small as compared to me because nobody has got more than 1%. None of the shareholders has got any arrangements to consult any others or to make any collective decisions. I am not given anything else. So I can say this is a case less than majority and there is nothing else. So this is a case where there is less than majority and I've got nothing else with me. I've got nothing else with me. Now, in this particular case, it is subjective. It is undoubtedly subjective in nature. But we need to see if I am relatively bigger as compared to the other investors. Everybody has got less than 1% stake in the company. And if you compare my relative size as compared to the other investors, I think it is a huge possibility that I get power. So it says out here, I'm just going to the answer. In this case, on the basis of the absolute size of the holding and the relative size of the other shareholders, the investor concludes that it is a sufficiently dominant voting interest to meet the power criteria without the need to consider any other evidence of power. Considering that I am at 48, my absolute size, considering that everybody is small to me, Relatively I'm bigger, absolute I'm bigger, relative I'm bigger. I think this kind of assessment tells me that I will get a power. Simple. So this was one combo. Now let's have a look at another one as well. Let's see example 5. So let's have a look at the example number 5 now. So this is another examples which I've taken in the appendix B of the standard. So let's have a look at this. Investor A has got a 40% voting rights of the investee, undoubtedly less than majority. And there are 12 other investors with 5% of the voting power. So A has got a 40% stake. Then there are 12 investors with a 5% stake. That makes it a total of 100%. Before I read, let's take it further. Is it easy to outvote 2 people, or is it easy to outvote a total of 12 people? Rather, let's put it like this. Is it easy for me to convince 2 or 3 people, or is it easy for me to convince maybe around 12 people? I think it's difficult to convince 12 people. If 12 people come together, they get a 60% stake. They outweigh me. Please hear this carefully. There are a total of 12 investors who have got 5% each. All the 12 investors come together and then they are able to outweigh me. I think it's difficult that 12 people will agree mutually and fight against me. The more number of people, sir, what are you saying? I am saying what is given in the standard. The standard is very categorically given us the parameters. More the number of investors you need to outweigh you, you still have a power. Less of the people you need to outweigh you, you lose your power. If there are just 2 or 3 people who could easily outweigh me, they could get together and they could outweigh me, I lose my power. But if there are so many people who are required to come together to outweigh me, it's difficult that they will snatch away my power. So let's read it further. So it says you've got a 40% stake and there are 12 investors, 5% each. Shareholder agreement grants investor A the right to appoint, remove, and set the remuneration of the management responsible for relevant activities. So I can see that this is a case of less than majority. This is a case of less than majority, and there is a right to appoint or remove the KMP. This is falling in this category. The previous one was nothing else. And this is a combination where it is less than majority and you've got the right to appoint or remove the KMP. So this case also we said is subjective. You cannot say that it'll give you a confirmed power. It says to change the agreement, a two-thirds majority of the shareholders is required. Now that's interesting. This investor A has got a 40% stake and the other investors have got a 60% stake. He has the right to appoint or remove the KMP, the key management person of the company, and this right can be snatched away only if two-thirds people come together. Two-thirds people come together means it is supposed to be 66.67%. The question now arises, how will the 66% people come together? Because leaving me, the rest of the investors have got a 60% stake. Where will they achieve a 67%? So this right to appoint and remove a KMP cannot be taken away from me, because they cannot achieve that two-thirds majority to take away my power in terms of appointment and removal. So I think with such a strong percentage that nobody can snatch away the right to appoint or remove the KMP, I get power. In this case, investor A concludes that the absolute size of the investor and the relative size was greater. Your relative size was greater, but in this case, your absolute size at 40 cannot be greater. Your relative size compared to other investors with 5% each cannot be greater. So simply on the basis of a 40%, you cannot say that you are absolutely and relatively bigger in size. But However, when the investor A determines that its contractual right to appoint, remove, and set the remuneration of management is sufficient to conclude that it has got a power over the investee, because nobody can snatch away his right to appoint or remove the KMP. So since this right is something which nobody can snatch, I think now looking at the facts of the case, one could conclude that yes, I get a power in this case. I hope, friends, I made sense. Okay, that was example 5. Let's see example number 6. Let's now have a look at example number 6 now. All these examples are given in the standard in the appendix, and these are also a part of the illustrations in the study material as well. So I would say, when you're going to make your mind maps as well, what you can do in this particular case, try to map up the illustrations as well. See that this is the concept and these are the illustrations mapping the concept. Helps you a lot towards the end. So let's look at the example number 6. It says, investor A has got a 45% voting rights. That makes it close to majority. Absolute size is big. And 2 other investors with 26% of the voting rights. So 2 investors with a 26% voting right makes it 52. Aha. Lesser number of investors are required to outweigh me. My absolute size is bigger, my relative size is not bigger, because only 2 investors put together can easily outweigh me. The chances are bright I will not get a power. Remember the first example, 12 investors in the previous one, 12 investors were required to outweigh me. But in this case, only 2 are required. So it says the remaining voting rights are held by 3 other investors, each having 1%. So he has got 45. The other investors have got 52. And there are 3 investors with 3. That makes it a total of 100% stake. There are no other agreements that affects arrangements that affects decision making. In this case, the size of the investor's A voting interest and his relative size to other investors are sufficient to conclude that A does not have a power. Only 2 other investors are needed to cooperate to be able to prevent A from directing the relevant activity. Just 2 people required to put together. I remember somebody asking me a question a long time back and said, sir, if the 2 people are, supposed to be enemies, then what? I told him a very simple answer. Dushman ka dushman dost hota hai. So in any case, if you're thinking that the 2 investors, if the 2 investors are even enemies, I think they'll definitely join hands together, because if they know that they join hands together, they can easily throw me out. Why would they not do it? Do you think they'll get dictated by me at a 45% stake and they'll not join hands together? No, they will. So this is a case where there is less than majority. And coupled with this, I can say what is more important in this particular case is that we can say the other investors, I can say, rather I would say this is nil. I've got nothing else. I'll put it in this category that I've got nothing else. I just have got a less than majority stake. I've got nothing else. But when I look at the facts of the cases, I see that people can outweigh you easily. 2 investors join hands, throw you out. Okay, let's look at example number 7. Investor has got a 45% voting rights of the investee. 11 other shareholders each got 5% voting rights. So he's got 45 and 11 investors with a 5%, that makes it 100. Do you think 11 people will be enough to outweigh me? Of course not. 11 people put together will not be able to outweigh me. But is my absolute size bigger? Yes. Is my relative size bigger? No. Do you think those 11 people will be able to outweigh me? Maybe, maybe not. So is it still subjective? Can I really conclude that at 45% you'll get a power? I think no. I think I need more facts and circumstances to reach any kind of conclusion. Because in this case, solely on the basis of the fact that you have got 45 and there are 11 people standing elsewhere, I think their relative size is not, my relative size is not small, is not big, number one, but those 11 people will join hands or not, can't say. And just on the face of this, I don't think so any conclusions can be drawn. So it says none of the shareholders have got any contractual arrangements to consult or to make collective decisions. In this case, the absolute size of the investor and the relative size of the other shareholders are not conclusive in determining whether he has got power or not. So additional facts and circumstances may provide evidence that investor has or it does not get a power. So this is one case which is subjective in nature. This is also falling in the same category, but it is becoming subjective in nature. You would have witnessed something, and I want to actually, consolidate that witness what you've seen. If you've seen the example so far, I'll just like to, give you some inputs at this stage to just correlate. If you look at the example number 4, or you look at the example number 5, or you look at the example number 6, and you look at the example number 7, you would have witnessed the evaluation procedure. In terms of the very first example, it was a case of a 48% with nothing else. In the example number 5, which we did, it was a case of, I guess, 40%. It was a case of 40%, and there was a right, I guess, to appoint and remove the KMP as well. In the example number 6, it was again a 45%, and there was nothing else. And in the example number 7 also, it was supposed to be 45% and nothing else. Now you will witness something that, in all these cases, except the example number 5, you would have noticed something that in the entire analysis, what was happening? We've been looking at the absolute and the relative size. In all the cases, we've been looking at the absolute and the relative size. Here, the other investors was like 1111% each. So we said, absolutely you're big, relatively you're big. So the chances of getting a control, the chance of getting a power was enhanced. In the other case, when you said that you look at the absolute size, it is good. But in this case, if you remember, in the example number 5, there were supposed to be, a total of 12 investors. Here we had got a total of 12 investors with 5% each. So with 12 investors with 5% each, the relative size was getting weakened. So here the absolute was great, the relative was great, and you could reach a conclusion that yes, you are getting power. Here the absolute was good, but the relative was not good. So you had to look at the other facts. You had to look at the other facts in this case. And the other facts was based on the KMP position. So we could conclude that yes, you are getting a power. When we came to the example number 6, we again said in absolute we are big, but relatively we said we are not big because there were 2 investors with 26% each. So can you see the order of evaluation? You're looking at absolute, you're looking at relative. The relative assessment tells you, is there a need to look at something else or not? The absolute is good, the relative is good, done. The absolute is good, the relative is not good. You look at other facts and say yes or no. The absolute is good, the relative is not good. You look at the other facts. You look at the other facts in this case. This was the other facts which you looked at. And in this example number 7, the absolute is big, but the relative is not big. And when you look at other facts, the other facts were missing. The other facts were missing. So we said, I can't take. It was only because you had the power to appoint the KMP. Then you said, so look at this. We never concluded that. Let me just give you the chain once again. Let's now clear. Great. So let me still give the inputs to you. You're looking at absolute, your absolute size, your relative size, and depending upon the facts, other facts. So let's put the chain again. In the example number 4, absolute good, relative good, decided you've got power. Next example 5, absolute good, relative not good. We need more facts, KMP, you got power. Example 6, absolute size good, relative not good. Other facts, 2 investors, 26, no power. Here we said absolute size good, relative not good. Other facts not given. Give me more facts. Additional facts required. So can you see the chain is based on more or less again a 3-step model? Are you getting my point? Right? If you look at the inputs in terms of the existing rights itself, I'll just like to put it across. The existing rights itself, I would say, is coming on a 3-step model. So when you're looking at the existing rights and when you're less than majority, you're again working on more or less a 3-step model. I like to put it across. So when you're looking at the existing rights, when you've got less than majority voting rights, there will be a very crucial need in terms of making a mind map, in terms of consolidating all the inputs. To remind you, we're still on step number 1. So in terms of existing rights, when you say it is less than majority, you can say we've got again a movement of looking at a 3-step model in this case. And when I'm looking at the 3-step model, I am looking at something like this. That'll make your life simple in terms of assessment. You are going to first of all look at the absolute size. You're going to first look at the absolute size. Then you are going to look at the relative size. Comparative. This is मैं ही मैं हूं तो क्या मैं हूं, तुम ही तुम हो तो क्या तुम हो. So the absolute size is one, the relative size another, and then there is other facts which needs to be looked into. The other facts also to be looked into. You need to see the other facts as well. Now, if I look at the permutations, combinations, which are based in terms of example 4, in terms of example 5, in terms of example 6, and in terms of example 7. To make the chain absolutely clear in terms of your minds. So if you look at the chain in terms of this, now see, how did we actually make an evaluations based on this? In example number 4, I said it was 48%. And when I looked at the relative size, so was the absolute size big? Yes. When you compared the other investors, it was 1%, relative size big. So in this particular case, not required. The 3rd step was not required. And we said the power is there. In this case, we decided the power is there. A bigger absolute size, a bigger relative size, no need of the 3rd step. Then we went to the example number 5. We said you've got 40%. Absolute size is big. Other investors, there are 12 investors with 5% each. Relative size not big. I went to the other facts and I said, you get the right to appoint the KMP. Based on that, I said, yes, you get a power. Because this is a right which nobody can snatch away from you. If nobody can snatch away the right from you, you get a power in that case. Next, we look at the example number 6, which I think was a percentage, 45%. So this was 45% in terms of absolute, yes. And if you look in terms of the relative, there were 2 investors, 26% each. So we said no relative size. Here again, because of this, we were not required to look at any additional facts in this particular case. And we said there is no power. Can you see the sequence? The sequence is very clear. Where do you look at the other facts? Where do you look at the other facts? That has to be very clear in mind. Then example number 7, we said a 45%, we said a yes. And then there are 11 investors with 5%, we said a no. So now you can see the comparison. Look at the comparison of these two. In this particular case, the situation is almost similar, but more facts were given. We required more facts. We required more facts, but they were not given. Since no facts were given, I could not conclude anything. I could not conclude anything. Do you see the thought process of the standard setters, how they are building your thought processes? That when you start looking at absolute and relative sizes, when no information is required, when information is required and is given also, and is not given. So these four illustrations, examples, will give you a complete thought as a package. I hope, friends, I'm clear with the picture so far, right? So far, so good. Okay, I think it's time now to give you some break as well. I'm sure you need one. We're still not done with the step number 1A. I'm still supposed to take one or two more examples on the concept of the power assessment, where we yet to see the concept of potential voting rights. Because we've seen other combinations, but we want to see the potential voting right examples. And then my step number 1 will get done. Then we'll start working on step 2. Third, we have already worked for. Then we're going to make a complete package of the mind map as well. But all that, I guess after the break, I'm sure you all need a little mental rest as well. Right, friends, so we'll take a break for 10, 12 minutes now, and I'm going to join you after the break. Please enjoy your break. Okay, thank you. I hope you had a relaxation of mind. So now let's take the journey forward and let's take more examples on potential voting rights as well. Because all the examples, what we have seen so far is relating to the concept of making an assessment if there is less than majority and either there are any other facts given or not. Now let's, I think, go on to an example where we've got potential voting rights as well. Now, before I take you to this particular example, there is something more also which is coming to my mind. So I think before we read the example 8 and 9, I guess let me first give you a little chain of thought as well. Let me just, I think, probably shift it out here to give you the thought processes as well. Now, what is coming at the back of the mind is when you're looking at the potential voting rights, the question arises in terms of the potential voting rights. What potential voting right should I look at? Should I look at the investor's potential voting right? Or should I look at the other investor's potential voting rights? So I would say you should look into both. I would say one should look into both. You should not only look into the potential voting rights of the concerned investor, but you should also look at the potential rights of other investors. Why am I saying that? The reason is the investor's potential voting rights. Today, you are standing at less than majority. But with your potential voting rights, you might reach a majority voting rights. So as an investor, you've got potential voting rights. So you may be able to convert it into a majority. Or with the other investors, what can happen that today this investor has got a majority voting rights. But because of the other investors, he may convert into less than majority voting rights as well. So other investors may be able to snatch away your voting majority rights. So you need to look at both the angles that your voting rights potential can make you a majority, or other investors, potential voting rights could snatch away your majority as well. So both the examples 8 and 9 is, throwing a light in terms of not only look at your potential voting rights as an investor, but also look at the other investors' potential voting rights as well. So now let's have a look at the example number 8 and on the example number 9. So we'll identify, which case is fitting into this particular case. Investor has got a 35% voting rights and there are 3 other shareholders with each 5% voting rights. And then it says the remaining voting rights are held by numerous other shareholders, none of which has got more than 1% voting right. So it makes it 35, plus there are 3 investors with 5, and rest is supposed to be, 1% each. So it seems everybody is widely scattered. It says none of the shareholders has arrangement to consult any of the others and to make any collective decisions. Now this example is not on potential voting rights. Just to clarify, this is not on the potential voting rights. It is based on the previous inputs itself. So at this stage, do you think we can draw any conclusion that at 35, what is your absolute size? I would say not that big. What is your relative size? I would say perhaps not that big. We need more facts, correct? If you look at the absolute size in this case, I would say not great. Relative size, not great. I guess even on an absolute size, you might still say yes, that's okay. Even if you say that absolute size 35% seems to be great to me, it's okay. So absolute size is great, but relative size is not that great. So when I look at the other facts of the case, right now no other facts are given, but let's see, he's given more facts. Decisions about relevant activities require the approval of majority, and 75% voting rights have been cast at recent relevant shareholders meeting. He says in order to take decisions, we need a consensus of majority. Now majority per se means more than 50. But he says the recent trend is indicative of the other facts given in the question. In the recent meetings, we have seen that 75% of the majority rights are being achieved. This is indicative of the active participation of all the shareholders at the recent. I think there is a possibility we cannot say that he's got a power, because with a 35% stake, the meetings are being, engaged. Everybody is engaging in the meeting, and 75% active participation is happening. It's difficult to say that he's got a power. No, of course. So it says indicates that investors would not have a practical ability to direct the relevant activities unilaterally. So I think this is one of the examples which is also can be added to the list of example 4, 5, 6, 7. Because in this case also the absolute size little lesser, but still there. Relative is of course not there. When you look at the other facts in terms of what is the pattern of pattern of people present in the meetings, it tells me that he cannot get a power. Okay, now let's come to the case of potential voting rights. Let's look at example number 9. It says A has got a 70% voting rights. Wow. Apparently, it seems that it is a case of majority voting rights, unless mentioned otherwise, he gets power. And B has got a 30% voting rights, as well as an option to acquire half of the A's voting right. B has got a 30% voting rights, and he's got an option to acquire half of A's right. Are we looking at the potential voting rights of A? No. I'm looking at the potential voting rights of the other investor B. It needs to be seen that the potential voting rights of B, is it going to snatch away the majority rights of A or not? If yes, A loses power. If no, A still gets a power. It says the option is exercisable for the next 2 years at a fixed price that is deeply out of money and is expected to remain so for the next 2 years as well. I want you to take a decision, friends, on that. The other investor has got a 30% stake, and he's got an option to acquire 50% stake of A, and the option is deeply out of money. Do you think B is going to exercise the option? And that's right, no. B is not going to exercise the option, and if B is not going to exercise the option, I think A gets a power in this case. So I'm just going to take it ahead. So we can say in such a case, A is likely to meet the power criteria because it appears to have a current ability. Although B has a currently exercisable option, that is, if exercised, it'll give him a majority, but it is definitely seen that since it is deeply out of money, he is not going to exercise the option. That was simple. Looking at the potential voting rights of the other investor. Now let's look at another example as well. This is on your own potential voting rights. So let's have a look at example 10. I think that is a pretty easy and a straightforward example number 10, where you're looking at the potential voting rights of the concerned investor. It says investor A and 2 other investors each has got 1/3 of the voting rights of the investee. So A has got 1/3 and 2 other investors have also got 1/3, which makes it a total of 100% stake. So if you look at the percentage, it is 33.33%. The investee's business activity is closely related to the investor A. In addition to its equity instruments, A also has got debt instruments convertible into ordinary shares of the investee. This is indication of the potential ordinary shares which the investor has in the investee company. So in this case, you're looking at the potential investment with the concerned investor itself. And then it says that this is out of the money. Aha, it's not deeply out of money. If you remember my discussions earlier, I said if it is in at out, that makes it subjective. You cannot outrightly say that this is a case that he will not exercise. He may. It says, but not deeply out of money. If the debts were converted, A gets a 60% voting rights, and A would benefit from realizing synergies if the debt instruments were converted into ordinary share. Now he is giving you two inputs. The option is out of money, but he says if conversion takes place, he gets a 60% stake, one. If the conversion takes place, it gives him synergic benefits, two. Investor A has got the power over the investee because holding the voting rights is giving him, you can say, current ability to direct relevant activities. Considering the subjectivity that, if he exercises, it is out of money. But there are two incentives, as I said, that a subjectivity that it is in at out money could lead to more facts being evaluated. In this particular case, I get a 60% stake. Number one, I would say three reasons. Number one, the investee's business is closely related to the investor. That's one. He's going to get synergic benefits out of this conversion. That's two. And he's going to become a majority stakeholder of that company. That's three. So I think these three incentives are indirectly proving that A would exercise the potential voting rights. And he will be able to convert into majority, and therefore he gets a power. Well, my discussions on the step number one is done. I think now, before we go to the step number two, I am undoubtedly going to create a mind mapping as well. So let me now consolidate the concept of power. I've not done the concept of control. I've done the concept of power. That is ER, existing rights, CA, current ability, and that is RA, relevant activity. Let's now merge everything. Now watch this very carefully, friends, because this is now going to consolidate almost all what we've done in almost another 2 hours plus. And I'm going to consolidate this entire picture to you. So let's make a mind map on this particular case. So let's create a mind mapping at this stage. Now watch this carefully. And if you're able to correlate with all this, trust me, you're going to get a good hang on the control assessment. So my mind is now working only in terms of step number one only. I'm just working on step number one only. So my concentration is only in terms of power. So this mind map is only on step one, that is the element of power. So we've got three elements in terms of power. So when I'm looking in terms of power, I'm looking at three elements. So your mind should immediately tell you that there is ER, existing rights, there is CA, current ability, and there is RA, that is relevant activity. So this is like step number 1A, this is like step number 1B, and this is like step number 1C. Now we studied the concept, zigzag, CBA. Now we're going to, make the mind maps ABC. Now when it comes to the existing rights, what should come to your mind is a chart at the back of the mind like this. So when you look at the existing rights, what should come to your mind is voting rights. And it can be and or, that is right to appoint or remove KMP. Right to appoint or remove the KMP. So this is what should come to your mind. Now further, as you move ahead in terms of voting rights, what should come to your mind is another two permutations, combinations in this particular case. It is majority voting rights, or it is less than majority voting rights. It is less than majority voting rights. When you say it is majority voting rights, what comes back to the mind is again a total of two cases. So your mind should map, on a chart levels clearly. So in this particular case, I think, let me just, zoom out a bit as well to make it visible. Yes, I think that's fine. So in terms of the majority voting rights, we can say it is a power is a yes or a power is a no. We have not done any questions on these two cases. And when you say it is less than majority voting rights, then I would say effectively you are going to get only 4 cases. Let's forget about the 5th one. Combinations is practically not there. So it is plus a contractual arrangement. It is plus a contractual arrangement. So I'll give you the key considerations. Plus, you can say, rather, let me do one thing. Let's make something more interesting to you. I'll make it as, a case of 3 broad categories. It can be potential voting rights PVR, or it can be, you can say, a case of KMP, or a case of, let's say, or let's not put it as KMP. Let's put it like this. We can say plus additional facts. Let's put it like this since we have done the mapping. Now watch this carefully as I map this entire inputs to you. Okay, so I think let's first concentrate on this particular area. So we can say we've got a case number 1. This is case 1. I'm now looking at, the kind of questions which could come on a power assessment. Existing rights. So if you're looking at this particular case, this is unless mentioned otherwise. This is a case of a yes, it is unless mentioned otherwise, and you cannot get a question in the exams on this. What is the examiner going to ask you? That I've got a majority shares in a company, that's it. Tell me, do we have a power? It goes without saying. So category 1 questions cannot come. And this is category number 2 questions that can also practically not come, because this is a case which is subject to approval. What is the examiner going to ask you in this particular case? That in this particular case, if it is subject to approval, then what is good need in terms of asking? Because if I tell you that you need to take permissions and approval, you don't have a power, simple. Then the third category of question is a contractual arrangement, which is again a confirmed case of a yes. Even this cannot be asked in the exam. Because if you've entered into a contractual arrangement, do you remember looking at any illustrations when I did example 4 to example number 10? In example number 4 to 10, we had no questions on these areas. So I would say when you're looking at the concept of power, not power, I would say when you're looking at the concept of, I would say, the existing rights, you should look at the example which I gave you, the example number 4 to example number 10. So that will make you a complete revision of things. So these 3 cases cannot come. Now let's come to the 4th one. Let's consider the 4th one, this one. Now when it is a case of additional facts, I would say please apply a 3-step model in this case. I would say in this case you need to apply a 3-step model, and in terms of the 3-step model, let's see what is my 3-step model in this case. My 3-step model is to first look at the absolute size. The first is to look at the absolute size. The second is to look at the relative size. And the third is to look at the facts, other facts of the case. The other facts could be in terms of appointment or removal of the KMP or whatever. So everything is contained in this part. So when you look at the absolute size and all these things, I guess I can map up now. Your example number 4, example number 5, example number 6, example number 7, 8, all based on this. So it was based on this. Your example number 4 to example number 8 was all based on my 3-step model. So when you're going to make your revisions on this, remember that this was based on the 3-step model where we looked at the absolute size, the relative size, and if this is yes, you go to the second yes. And if it is yes, we're done. If it is no, you look at the other facts in that case. And then I would say, when you're looking at the potential voting rights, I would say the potential voting rights is like the fifth category of question. So you can get questions on this area, you can get questions on this area. I hope you're able to get the chain of thoughts very clear. So in terms of the potential voting rights, we can say you need to see investor and other investor. You need to see the investors and other investors' potential voting rights both in this particular case. And here we looked at the example number 9 and the example number 10. So both these examples was on the potential voting rights. So as you revise now, you should be very clear in terms of what kind of questions can come on the power assessment, typically your existing rights. So you need to see that the main questions could be on a 3-step model or in terms of the potential voting rights. There was a very interesting question, which came in the revisionary test papers. That was the only, I think, one question I've seen, a comprehensive one, which came in the RTPs, where there was a control assessment based on all these inputs. Okay, so this is one. Let's now take it further. So as far as the appointment or removal is concerned, independently, this will not be seen. Now let's go to the next element. So when it comes to the current ability, we said in terms of current ability, when need arises. When the need arises, and in this particular case, I have already given you a chart. You should be able to make a reference to the chart which I gave you, which was based on the concept of 3 kinds of existing rights. You've got a majority voting rights already. You are a party to a forward contract, or you are a party to the option contract. And if you ask me, in this particular case, I think we did the example number 3. The example number 3, which we did in the morning, is supposed to be early morning, was based on the current ability. So wherein we saw the different kinds of existing rights, and on that basis, we were making the current ability assessment. And finally, as far as the relevant activities are concerned, I gave you a list in the notes already. I already gave you a list in the notes already, that what kind of examples are there, illustrative examples of relevant activity. But of course, these relevant activities are which has impact on the profits of investee. It has got the impact on profits of investee. So anything which will influence the profits of the investee is relevant in nature. Right, friends, I hope this particular mind map is going to be of good help to you in order to consolidate the learnings, right? So I think one next sentence which I want to put across in this particular case is, you need to see what kind of rights you've got today, which will give you the ability when the need arises to do what? To direct relevant activity. So if you've got some kind of rights today, which will give you the ability when the need comes in to direct the relevant activities of a business, I would say you get power. It's not control. The assessment is in terms of power. So we should be now able to clearly understand what is existing rights, what kind of rights are there, what is the current ability, what consideration goes in assessment, that when the need arises, will you be in a position or not, and the decisions which you need to take as an investor involves certain important rights. Will be very helpful indeed. That's wonderful indeed. Great. Now let's go on to the next area of discussion. Step 1 is done. I now need to go to the step number 2. There are some very interesting illustrations which are given in terms, not illustrations, but a guidance which is given on the step number 2. I'll give you 2 cases in terms of step 2 to watch it. So watch the step number 2 carefully now. So now we are going on the control assessment, that is on step number 2. And in the control assessment, I am looking at exposure. I'm looking at exposure to variable returns. I'm looking at the exposure to variable returns. Now, let me take two examples to illustrate the step number 2 essence to you. That when I'm looking at the exposure to variable return, is the investor exposed to variable returns or not? We'll look at the step 2 and 3 simultaneously in this case. So I'm also going to indirectly cover the step number 3 as well. So let's take two cases with you and let's make a walkthrough. So I'll give you the facts of the case, and we're going to look at the step number 1, we're going to look at the step number 2 and the step number 3, and then we'll give our remarks as well. So let me do one thing. Let me first put down the facts of the case. So we'll take the facts of the case. I'm looking in terms of step number 1. I'm looking at existing rights, current ability, relevant activities. I'm looking at the step number 2 in terms of exposure to variable returns. And we are looking in terms of linkage. So exposure to variable returns, and in step number 3, we're looking at the linkage. And based on this, we will give the remarks, and this remarks will be on the control assessment. So we're indirectly considering the step number 2 and 3 put together in this particular chain of thought. We're looking at the control assessment in entirety. Okay, now watch this carefully. The two examples which I'm taking is, going to cover up my step number 2 entirely. Now watch this. Let's consider there is a company A which has got, in terms of company B, let's say 56% stake. Nothing is given to the contrary. A has got a 56% equity stake in B. I put across a question, is there an existing rights? Yes. He's got majority voting rights in this case. Unless mentioned otherwise, does he get a current ability? Yes. And I presume it is to direct relevant activity. So this is unless mentioned otherwise for sure. Now, what is the return he is getting? Since he's made investment in equity shares, he is getting a dividend, which is a fixed return or a variable return. It is a variable return. He is getting a dividend, and this dividend is something which is variable in nature. So since he's getting a variable return, I can say he is undoubtedly exposed to a variable return. So in terms of step 1, is he got power? Yes. In terms of step 2, is he exposed to variable return? Yes. So is the linkage? Yes. Yes. And therefore he gets a control. I think that's pretty simple and pretty straight indeed. Let's take now another example, which is the main discussion point in terms of step 2. Let's consider that A is got, in terms of B, let's say a 45% equity, and he has got potential voting rights. He's got potential voting rights in the form of, let's say, convertible debentures. He's got, let's say, potential voting rights in terms of convertible debentures, and let's say the option to convert is deeply in money. So in this particular case, what is the existing rights? I would say, has he got existing rights? Yes. He has got less than majority. I would say he's got less than majority, and he has got potential voting rights as well. Will it give him the current ability? Yes, it'll give him the current ability on the assumption it's deeply in money. So I am considering that the option is deeply in money. So, and it will be exercised before the meeting takes place. I'm presuming that the option is deeply in money as well, and it will take place before the meeting takes place. So yes, the current ability is there, and it goes without saying to consider decisions on relevant activity. Now, I think let's ask you a question, friends, at this particular stage. Now, my question to you is he exposed to a fixed and a variable return? or is he exposed to only a variable return? Mind the question. Is he exposed to a variable return or is he exposed to a fixed and a variable return? Remember, he's got convertible debenture, which is giving an interest at the rate of fixed rate, and he's got ordinary share, which is giving a variable dividend. And that's rightly said, it is both. But I would say he is getting a dividend and he is getting a interest which is fixed in nature. Is this giving an exposure to variable return? The answer is a yes. You heard me correct. The answer is a yes. He is exposed to variable return. Sir, what are you saying? You need to now focus on another important word. Your focus is going on variability, but you also need to look at the word exposure. I did not say that I am entitled to fixed return. I said I'm exposed to fixed return. Sir, what is the difference between entitlement and exposure? If somebody were to ask me that, are you entitled to fixed return? I would say yes. I am entitled to a fixed return, but am I exposed to variable return? I'm not exposed. I'm entitled to fixed return, but I'm exposed to variable return. Reason. The company, the investee company, has to pay me a fixed interest. What if he is not able to pay? What if there is a credit default? Am I running a credit risk of not getting the money? Yes, I am exposed to variable returns. So that way, everything will become variable in nature. The standard made it very clear. I quote unquote what is given in the Appendix B of the standard. The Appendix B of the standard makes it very clear that if a company is getting a fixed return in the form of fixed interest payments on a debt, it says for the purposes of this standard. It doesn't say in journal, it says for the purposes of this standard, it is presumed that you are exposed to variable return. Because you are entitled to a fixed interest, but you are exposed to a variable return because of the exposure, because of the credit risk default. That is something very interesting indeed. So I would like to put it out here that you are entitled. I would say you are entitled to fixed return, but I'm not looking at the word entitlement. The word used in the standard is not entitlement. The word used is exposure. So when you look at the concept, we can say we are exposed. We are exposed to variable return. And why are we exposed to variable return? Because of the credit risk default. So because of the credit risk default, in this particular case, you are exposed to variable return. I hope I made my point clear. So the standard is very clear on the fact that the second step is exposure. Because in the first one, I did not pinpoint that. Dividends are, of course, entitlement to variable return and even exposure to variable return. Interest is an entitlement to a fixed return, but it is an exposure to variable return because of the risk of default by the investee company where he doesn't pay me the interest. I'm exposed to variable returns because of my involvement with him. Because if he earns a losses, he may not be in a position to pay my interest. I am getting exposed to variability. And in this case, step 1 and 2 is yes. So this is undoubtedly yes. So I would say a control is present. That was indirectly the step number 2 as well as the step number 3 put together as well. Though the focus was to tell you exposure to variable return, and the third was only to see the linkage, which is in terms of just looking at the answers in step number 1 and in terms of step 2. I hope, friends, I am now absolutely clear on the entire chain of control assessments at this stage. The journey does not end at this stage. Oh my God. So what is more, sir, in terms of the control assessment? In terms of the control assessment, there is another area of discussions in the standard and in the study material as well. Our entire discussions has been based on the assessment of control based on voting rights. What happens when we're not looking at voting rights as the basis of assessment of control? What happens when I'm looking at your decision-making rights as a base? So what are you saying? I'll now expose you something else. I'll expose you something else, though we'll not get into too detail on this particular part, but we'll do some discussions on the second area of control assessment as well. Tomorrow we'll start with the inputs in terms of how consolidation is done. Tomorrow is going to be very important class indeed, because I'll lay down the mapping in terms of how the consolidation is done. I'm going to give you my own step-by-step model tailor-made to the needs of any kind of complicated questions to be handled. So I am now coming back on the chain in terms of control assessment. And as I said, there are basically two areas, or you can say two parameters on the basis of which the control assessment is done. When you do a control assessment, I would say there are two parameters of a control assessment. All the questions we have done on control assessment is based on what I call voting rights. Another parameter of taking a decision on control presence is the decision-making rights, what I call DMR. So let's put it like this. When you look at the parameters of control assessment, the parameters of control assessment can be VR. That's what we've already done. That's called voting rights. And the other parameter of the control assessment is called DMR. That's what I call decision-making rights. So, but what is the difference? No worry. Because you'll say that when you're looking at the voting rights itself is supposed to be based on the parameters on which decisions are taken by shareholders. Yes. So this area is what we have already discussed so far. So this is the area what we have already done so far. Now we are going to look at a DMR. Now watch me carefully, friends. I will take a comprehensive example also, but before that, I need to give you a larger picture as well. What happens? A company appoints a fund manager. You're already aware of the concept. What exactly is a fund manager? You've got exposed to financial management, AFM, advanced financial management as well. And you know that companies would appoint a fund manager. So in order to handle the portfolio of investments, you would appoint a fund manager. And in this particular area, I want to see that is the fund manager supposed to be having a control or not? So now what's this clear? When I'm looking at the decision-making rights, I'm looking at again the two factors. One is I'm looking at power, and the other I'm looking at exposure. The other I'm looking at exposure to variable returns, and then I am looking at linkage. Linkage, as we've already seen, is nothing. But if you say the power is a yes, Jenny, so since very first lecture, all classes seems to be very important. Since I'm dealing with all the topics which are most important indeed, because if you look at consolidations, including business combinations and financial instruments, I think the weightage would easily be least to least, I would say 32. But I think if you take the MCQs also into account, you're going to get almost like 40% of the paper coming out of this area, or maybe more than that. And I think, if you look at the other areas in terms of FR, I would say the level, the intensity of those topics is not that technical. But if you look at the intensity in terms of financial instruments, in terms of consolidations, it's brilliant. So I think, that's why I say it's very important indeed. Okay, so coming back to the picture. So what I said, when you're looking at a fund manager, you're looking at the assessment of power, the exposure to variable returns, and the linkage, which is based on this is yes, the linkage is yes. Now let me first give you a thought process, and based on that, we are going to take the inputs further. When you are looking at the concept of power, there are two things to be seen. When you're looking at the concept of power, there are two things to be seen. Now, please imagine a fund manager. We'll take an example later. Don't worry. Now, please imagine that there is a fund manager. You need to see what is the decision-making rights of that fund manager. What is the decision-making rights of the fund manager? The fund manager may have a decision-making right which may be substantive, or it may be, you can say, not substantive in nature. How do we assess that? We'll see. So we need to see what is the role of the decision-making rights. Is he free to take any kind of decisions or not? So I want to make the assessment that as a fund manager, am I completely free to take decisions or not? But then along with this, I also need to see the decision-making rights of the other investors as well. So I need to see that the other investors are merely protective rights, or their rights are substantive as well. So he is free to take decisions, but these people are also got a very clear-cut right that they can remove him whenever they want. So I need to see, in other words, to give you some terminology, I need to see that the decision-making rights of the fund manager is wide or is it narrow? Is he free to take any kind of decisions? If he's got a complete discretion, it's wide. If he's got no complete discretion, then I would say it's narrow. And I want to see that the other investors' rights are substantive, major, or they are protective in nature. Or they are protective in nature. How do we do all that assessment? We'll see in the question. No worries on that. So we need to see the decision-making rights of the fund manager is wide or narrow. Is he got the discretion to take decisions whatever he wants? Or is it narrowed down? And what is the rights of the other investors? The rights of the other investors, which I need to see, is in terms of what we call removal rights. The rights which we need to see of the other investors is called removal rights. I'll now take an example to illustrate this. I am appointed as a fund manager and I am told by the investors, sir, you invest money into power sector. It does not mean that my decision-making rights have got narrowed. It is only giving me a mandate. Investors are telling me, sir, you will put the money only in terms of a power sector. But within the power sector, there are so many companies. I'm free to put the money in any company. So that means that I've got wide rights to put the money. So even if the investors direct me as a fund manager that you will invest in a real estate sector only, or you will invest in power sector only, that does not mean that my decision-making rights have become narrow. It is still wide. Because I have the right to invest the money into any companies within that infrastructure or any companies within that power sector. At the same time, I also need to see the decision-making rights of the other investors. Can they remove me anytime without any reason? If they can remove me anytime without any reason, then their rights are substantive in nature. Then my power is zero. Because if they can tell me anytime, sir, you leave, we'll appoint a new fund manager, which means that my rights in those particular case is gone. So let me make a statement now. But if the other investor says, we will remove you only when our interest is getting impacted, it is protective in nature. So let me now make a sentence. Let me make some rather permutation combination. If the decision-making rights is wide and the other investors' rights are substantive, No power. If the decision-making rights are wide and the other investors' rights are protective, I get power. If the decision-making rights are narrow and their rights are substantive, no power. If the decision-making rights are narrow and the other investors' rights are protective, subjective. So there are 4 combinations which can come. So we'll see more questions on that. So you need to basically make an assessment. My fund manager is wide or narrow, other investors substantive, protective. If it is wide substantive, no power. Wide protective, power. Narrow substantive, no power. Narrow protective, subjective, I can't say. So once you do the assessment in terms of the power, then you go to the next area of assessment, that is exposure to variable return. For the exposure to variable returns, we will look at another 2 factors as well. In order to look at the exposure to variable returns, we're going to look at another 2 factors as well. And in the other 2 factors, what we're going to look at is number 1, the fund manager gets a remuneration. The fund manager gets a remuneration. Maybe he is getting a fixed salary. He is entitled to a fixed salary, but he is exposed to a variable risk, because if the company does not earn, he may not be able to be given a salary. So even a fixed salary to the fund manager is an exposure to variable returns. Got the point? The remuneration which he gets to manage the funds may be fixed in nature. He gets a fixed salary to manage the funds. But even if he gets a fixed salary, it is entitlement to fixed return, but exposure to variable returns. But remuneration should also have, you can say the fund manager should have a stake. The fund manager should have a stake in the fund. He should have also invested, I would say, at least 20% or plus. In order to say that he is going to get, exposure to variability, I would say he must have put in at least 20% of his own money also into the fund. So put together, his remuneration is giving a variability, and if he invests 20% or more than 20, it gives enough variability, then I will say exposure is a yes. Power, yes. Exposure, yes. Linkage becomes a yes. Let's do a question, friends, first on this. Let's see how these parameters are applied before we can document the inputs to you. So I am carrying another example with me, which is example number 14, which is again given in the appendix to the standard. And this has got a total of 3 cases on this. So let's look at example number 14. There are 3 cases A, B, C. So the base facts are same, but then we are going to see some variations in ABC on this. Once we get this example, then I'll give you the permutations, combinations. So let's look at example number 14 now in this case. A decision maker, a fund manager, establishes, markets, and manages a fund. So the fund manager is supposed to be establishing a fund, markets and manages a fund that provides investment opportunities to a number of investors. So we're looking at those fund managers who are establishing funds for mutual investments. So we can say mutual fund sahi hai, sahi to hai, but whether the fund manager has got a control or not is the agenda. The decision maker, the fund manager, must make decisions in the best interest of all the investors and in accordance with the fund's governing agreements. As I said earlier, if you mandate the fund manager to act in accordance with the governing which is given, that does not mean that he has got no wide areas of decision. You're only telling him which particular companies, which particular sector to invest. So even though he's asked to invest as per the governing agreements, doesn't make a difference. Nonetheless, the fund manager has got wide decision-making discretion. If you look at the power, the element number one of power, the decision-making rights of the investor, wide. The fund manager receives a market-based fee, which is 1% of the assets under management and 20% of the profits if a specified profit is achieved. He is getting a remuneration which is 1%, number one, 1% of the assets being managed and 20% of the profits if you reach a certain level. Is it a variable return? Yes. So if you look at the concept of power, out of the two parameters, is the decision-making rights wide? Yes. In terms of exposure to variable returns, I am looking at, in this particular case, is the remuneration exposing him to variable returns? Yes. So the only two things to be seen, now to be seen in this particular case is what is the right of other investors that will decide the fate, whether they can easily remove him or not. The second thing is what is the percentage stake the fund manager has got. So these two factors will decide whether he gets a control over the fund or not. So this is common to all the examples, what we're going to look at. Now, it says the above fact pattern applies to all the examples. Each example is considered in isolation. This is nothing, but it is something which I've already explained. So my first para is only giving me a common element to all the three cases: wide decision making, exposure because the remuneration is there. I am now going to concentrate on other investors' right of removal and what is the percentage stake funds he's got. So let's look at example number 14A. So let's consider the example number 14A. So each case is completely independent in nature, so we need to evaluate this separately. The fund manager is also got a 2% investment in the fund. 2% is too less to prove the variability of return. I said generally it should be 20% or more. So I think I don't need any further analysis. If you look at the concept of power, we've already said decision-making rights are wide. I'm yet to see the other investor, but if you look at the exposure to variable returns, his remuneration is definitely giving him exposure to variable return, but with a 2% stake. With a 2% stake, it is difficult to prove the variability to an extent. 2% is too less to prove a variability of returns, and therefore exposure to variable returns will not be there. So tell me one thing, if the exposure is not there, even if you get a power, how would it make a difference to me? I would say there is no control, but let's still read. Then he also tells you investors can remove the fund manager by simple majority, but only for breach of contract. So they can remove the fund manager with a simple majority, but only for breach of contract, which means the removal rights are completely protective in nature. It is only when the other investors feel that their interest is getting hampered, then they can remove the fund manager by a simple majority. So if you ask me, the power is there, but if you ask me, exposure is not there. So will there be a control assessment by the fund manager? The answer is no. Linkage is not there. Because power is there, exposure is not there, the linkage is missing, so the control cannot come. So it says, thus the fund manager concludes that it has got no control. He is merely acting as an agent and not a principal. So when you say that he's got a control, I would say he is acting as a principal. But when he's got no control, he's merely acting as an agent. Let's go to the example number 14b. The fund manager has got more substantial pro rata investment, but what is the percentage is not given. He says that you've got more substantive investment, but what percentage is not given. I believe more substantial should mean it should be 20% or more. If it is 20% or more, I think the exposure to variable returns will enhance. Remuneration is variable and exposure because of stake in the fund proves the variability. If the other facts are common, then control will come. The investors can remove the fund manager by simple majority, but only for a breach. So I would say power is now a yes, exposure now is a yes. And if you ask me in terms of control, I would say yes, the control is there. I'm now getting some permutation combinations. Don't worry, I'll make them. Let me first go to the third case as well. So we'll first look at the 14C and then we will make some inputs notes to you. We'll make some permutation combinations clear. So in 14C, it says you've got a 20% pro rata investment. And then it also says that the board appoints the fund manager annually. If he decided not to renew the fund manager's contract, the services will be performed by other managers in the industry. Do you think they've got right to remove without even a breach? Yes. If you look at the concept of power, as far as the decision-making rights of the fund manager is concerned, that was wide. If you look at the removal rights in this case, I would say it is substantive. If you look at the exposure to variable returns, I would say in terms of exposure, his remuneration is variable. He's invested 20% money. 20% is invested. The variability is enough. So this is substantive in nature. Power is gone. Exposure is there. But in this particular case, since one of the two factors is a no, the control assessment is missing. So thus the fund manager does not control the fund. So moral of the story, let's now give you the inputs on this case. So we can see the permutations, combinations, how the things are going to flow in this case. Watch this. I am looking at power in which I'm looking at decision-making rights of fund manager. I'm looking at the removal rights. I'm looking at the removal rights of other investors on the basis of which I will decide. Now let's look at the permutations and combinations in this particular case. So if I look at the permutations combination, we can say if it is wide and it is protective, I would say, is there a power? So I would say yes. If you say it is wide and they've got substantive rights of removal, is there a power? No. They can easily snatch your rights. Next, you can say narrow. And if it is protective, it's difficult. I would say it is subjective. It is something which is subjective indeed. And if they look at the fourth combination, it is narrow and it is substantive, then definitely not, because he can be easily removed. So I think the only case where he can get a power is this case, where he's got wide areas of decisions and the other people are completely protective in nature. Secondly, I am looking at the concept of exposure. to variable returns. I would say in this case, the remuneration coupled with at least 20% stake will give enough variability. So if you're able to fulfill both the parameters put together, it gives you enough variability. The remuneration is variable and you've got at least a 20% stake in the fund put together, it gives you enough variability. If this is yes, control. This is no, this is yes, no control. This is yes, this is no, no control. This is the case of control assessment for fund managers based on the power and exposure to variable return. That finishes, friends, our area of discussions with reference to the control assessment. We spent 3 hours today on the control assessment. You can now see the power of the principle-based assessments in terms of Ind AS 110. So what are we going to do tomorrow? We're going to start with the practical area of consolidation. I will teach you how to do consolidation under Ind AS 110. The practical base will start tomorrow. The crucial part, the practical portions will start. Right, friends, I think that seems to be good for the day. We are done with the agenda for the day. So if you've got any questions, go ahead. Otherwise, I guess we are done for the day. I can understand the mind must be, of course, quite tired indeed, but do your revisions as well. But of course, what we're going to start tomorrow is not connected to the control assessment, because in practical illustrations, the control assessment is always presumed to be yes, because the percentage is always a majority and that decides the control. Enjoy the lecture very much. Thank you very much indeed. I feel truly blessed on that. Right, friends, so on that note, I take leave from you. See you tomorrow once again. Thank you. Bye-bye. Enjoy the day. Excellent mind mapping. Thank you very much indeed. Hanji, thank you. Same to you. Bye-bye.